Hey everybody, Ed the Trainer back again to talk to you about the differences between RESPA and TILA when it comes to cost of closing versus cost of credit. When we're preparing new loan originators to be prepared for this test, one of the biggest common mistakes made is confusing the fact that RESPA, the Real Estate Settlement Procedures Act, requires the cost of closing be disseminated, be delivered to the borrower in disclosures through the GFE, the Good Faith Estimate, and the HUD-1 settlement statement. Now, cost of closing is often confused with what's termed as cost of credit, which is required of the Truth in Lending Act, which is a different aspect of the cost of getting that loan. Cost of closing is, what's it going to cost me as a borrower to get the loan, period, to get it closed? These involve costs generally paid to the lender for things like origination, underwriting, processing, etc., as well as third-party costs involving settlement service providers that charge a fee in order to help get the loan across the finish line. The cost of credit, on the other hand, is a TILA detail. And cost of credit is more or less what will it cost that borrower over the length of the loan for the right of ownership to have that loan over time. It's commonly confused because we think of cost of closing as the money the borrower has to bring to the table to get the loan closed, while cost of credit is something that really is not tangible to the borrower because their mortgage payment over such a long period of time is what winds up being $100,000, $150,000, $200,000 in interest charges, for example, that the borrower, again, over time, oftentimes grows immune to. They grow numb to it. The example that I often use with this is just to try to think about buying a car. Right? If you're interested in buying a used car, for example, you're in the market to buy something, let's say, for $10,000. So you shop around a little bit, and the cost of the car is $10,000. That's what you write the check for to buy the car, to close the deal. But that's not the last dollar you spend in your ownership of that car. You're likely going to have to pay to get the car inspected. You're likely going to have to pay to get the car insured. Certainly going to have to pay for gas. You're going to have to pay for maintenance. So over the life of the ownership of that car, if you paid $10,000 to get it, if you owned it for 5 years, 8 years, 10 years, you may wind up paying upwards of $30,000 or $40,000 by the time it's all said and done. It's a similar relationship between closing costs with RESPA, what's it cost me to get the loan, versus cost of credit under TILA. What's it going to cost me over time, ultimately, by the time it's all said and done with my loan after, let's say, 30 years? Which is why so many borrowers were shocked when they see a $200,000 loan that winds up costing them $400,000 when it's all said and done. Hope that helps. This is Ed the Trainer. If you've got questions, reach out to me. It's ed@edthetrainer.com.